Every trading system has a moment of truth, where by moment of truth I mean that time when a trader and his or her trading system calls them into taking a trading action. This is actually the point where all the planning will meet the preparation and hopefully an opportunity in the market. You would note that in one of the earlier videos I had clearly highlighted this point, the one in which I will be making a horizontal line now, just for some reason right here, and I'll mark it in let's say purple color. You would note that this is obviously the high of a range, and this point was highlighted in one of the videos previously. But we had discussed the need for removing the element of discretion from our trading and using mechanical indicators in order to trade. And the manner in which we have placed these indicators is to trade the pullback. So let us just find out if there has been satisfactory pullback in the price that we are seeing, and what will be the plan of action in the future. So obviously this here is the Nifty price chart on the hourly time frame, and this is the price action as of today. First step obviously would be to set up the ADX, which is done here, and we would note that the ADX value is at 44, significantly above the 25 threshold, indicating that this security is trending bullish strong. Once we have identified that the security is trending bullish strong, we will use two moving averages, the 20 period and the 50 period moving averages, in order to establish entry. You would note in the video yesterday that we had identified 22,575 as a point of entry, and this value clearly got traded today. So I would mark this here as a green line. And now since this value has got traded today, it is possible that either this value triggered and the trader booked the trade in a loss, or the value triggered and the trader decided to continue this trade, much like how we discussed in the gold chart, till their SL of 23,025, which was the value that we had determined on the yesterday's chart. If you remember, 23,030. This was the initial SL that was planned. So one could be that the trader initiated the long, and because the day closed and it closed lower from entry, the trader booked a loss. The other is that the trader initiated the long, but since the SL is not yet triggered, the trader is holding on to the position. If this is the case, that the trader is holding on to the position, we will use our technique in order to determine what to do next. So obviously our buying of the 20 period moving average is done. The next step would now be to buy at the 50 period moving average, which would be the second entry. And this also I will mark with the green line, and this is at 23,275, which is roughly 200 points lower from the Nifty closing today. And at this point, because our second entry is at 23,275, we will determine the SL using the ATR as of today, which is at roughly 90 points, which would mean that approximately 23,185 is where the SL would move up to. Since the trade is already initiated on the 23,000 call, we would continue trading that particular strike. The only difference is that earlier, where the SL for that strike was 25 or 30 points plus time value, today the SL for the same strike will be 190 points plus time value. It is not necessary that a trader enters with two lots, but we are just discussing it as a case study, wherein we have tried to test a system in which there are two entries, one on the 20 period and the other on the 50 period. And in yesterday's video, I had also shared how a trader could decide to choose a value in between in order to trade both their lots. If someone has chosen a value in between, then they would have pretty much hit the day low and entered both lots. This is something that the individual trader will optimize at their end. For now, our 20 period moving average is triggered. We are waiting for the 50 period moving average to trigger. The reason why we'll put the stop loss is because ADX is the reason why we'll put the entry for the second order is because ADX is above 25, and we already know the SL at which we are going to exit. So because this is happening as a continuation from yesterday's trade, and the reason why we are continuing is because of continuous charts versus discontinuous charts, and what is my perspective on gaps. That is, when I used to day trade, I used to close the position end of day. But when I realized that the impact of gaps is not even that significant, that is, there is no need to fear gaps that much also. And yes, when gaps can happen against you, they can happen for you also. In that context, I at that point decided to take forward my positions till as long as my SL was not traded. So the trade that would have triggered would have been 23,000 long on 23,000 CE. The SL obviously now would be 190 points plus whatever is the time value on the CE for the day. The second entry is due, which would be at the second entry would be due at 23,275 points, which will means 275 points plus time value would be the entry at the CE. So with a clear entry, clear exit, clear plan, I believe this is reasonable. And now, so what happens tomorrow? It is easy. If the market starts correcting tomorrow and it corrects by more than 200 points, you will enter your second lot on long. If the market continues to correct and it goes beyond 300 points, your stop loss on both these trades would have triggered. If the market opens flat and does not go correct significantly lower, then in that case you would only be holding on to your one lot deep in the money option. And your best case scenario would be that the market would eventually take out the previous high that is marked by the purple line. So with that, we will see how the trade session on Nifty unfolds. We will see if the 50 period moving average is tested or will it break. And this, like I said, is the moment of truth for the trader and for their trading system. This is also the time where traders have waited for several days in order to buy into the security. And since the time Nifty has broken out from this level here, which I will just mark in a blue line, this is the first significant pullback that we are actually seeing. So is it a buy on dip or is it going to be a sell on rise? These decisions are going to be these biases are going to unfold and present themselves in the coming few trade sessions. So exciting times ahead. We will see how the trade unfolds in the future. With this information, if you have any questions, you can leave them on the comment, and best of luck for your trades in the subsequent days.